Good morning. What's good, YouTube? Welcome back to another video. This video, I'm just going to be breaking down a live trade setup. Basically, my thinking before the setup happens, as the setup happens, and while I'm in the trade, and how my risk management is. Basically, how I manage the risk while I'm in the trade. So, this trade was about $600 between 3 accounts that I took it on. One was a combine, the other 2 were expresses. I accidentally bought another combine. I forgot I had the subscription still on there, the $50 a month. So now I'm trading another combine. I only have 3 expresses, so it's just fine. Doesn't really matter. I can just take another. I'll take another express. But yeah, I was just trading on that account. Basically just putting in trades so I could see my risk before I place the trade. But it's whatever. I'm already about to pass it. I'm at $52,200. So we're about to pass another combine pretty fast. Pretty simple. It's pretty easy to pass these combines, I'm not gonna lie. But yeah, let's just get straight to this breakdown. So this is before the setup formed. This is right as we came into the zone. So we have a ton of aggressive buying right here, all these aggressive bullish candles. This is a good indication that there is aggressive price action coming from the demand zone. So it's a good area to take buys. Now the EMAs are all in the middle. This is exactly what you don't want to see, but just like I explained in the last video, EMAs aren't everything. Price action is more key to base your analysis off. So here I disregarded the EMAs, and right here we're in the zone. So now I'm just waiting for the break of the candle, and just simple as that. Break the candle, entry, stop loss below the lowest wick, lowest area in that demand zone. And there you go. There's my one contract I placed. Now I do place another contract because $125 risk is not enough, and you can only place 2 contracts with the scaling plan where I'm at on my accounts with Topstep. So I can only get like $250 risk at most. Now I'm already in the trade, so I don't have to do anything. Just have to wait and let it play out. And I was just looking at natural gas here, looking at the supply here, just because the previous supply, it did win, but natural gas is a little weird. It like jumps around a lot. So I'm pretty sure I took the first supply on this one, and it hit my 1-to-1, but it just jumps around so much. I put stop loss to break even, and they got me out at break even. So alright, so yeah, I got stopped at a break even on the natural gas trade. So I was looking for another setup. Now we're coming back to entry here on Russell. Right now I was just looking at the markets, looking at what is going on. We're pretty bullish on all indices, so buys are in our favor. We're taking the Russell demand. And yeah, the setup already happened, so we're just sitting here waiting. There's a whole lot of waiting for trading. But you can see I was just watching this natural gas trade. I look mad as shit, but whatever. It's just serious, bro. This is serious. Trading is very serious. But you can see here, I'm pretty sure this Russell trade lost. It is pretty bearish. So sells are in your favor here. But pretty sure it breaks through. Yeah. So that supply was invalidated. So you can just cross that off the list. Gold dropped ton on that day. That day was crazy. But because I'm still in the trade, we're at $80 negative. I'm in drawdown right now, so just kind of just chilling, not letting the psychology take in effect. I don't make me want to close the trade or anything. It's either it's hitting my stop loss or it's hitting my TP. So this was the only setup for the day. Everything else pushed up too much and did not have a retracement into a good buying zone. So this was mainly the only trade for the day. Now right here you can see pretty deep in drawdown. Definitely looks like it's going to hit stop loss here, but just gotta believe in the setup. Definitely just gotta believe in the setup. You gotta trust your intuition. That's what gave me profitability, is trusting my own intuition. Now right there you can see I placed another contract. And now we're at 255 risk on this trade, which is the max risk I could put, sadly, but it's all good. we're pushing up. This was pretty beautiful. Once the bullish price action came in, it is sped up 2 times just to make the video shorter, but you can see as soon as we got out of drawdown, it was straight to TP. Exactly what it did before with aggressive buying. You can see that natural gas supply failed. In Q, it's kind of retesting the previous highs. I haven't traded in Q for months now. It really hasn't been performing at all. But you can see right there, the end of the green area is my 1-to-1. So that's my first profit target. So bullish price action should come in here, break the 13 EMA. And I was going for the highs pretty much. Trim one contract at the 1-to-1 and then leave the last one to run. So pretty simple here. Just supply and demand, rinse and repeat. This is a beautiful candle. This is exactly what you want to see right here. I believe this was only a 5-minute zone too. So we're almost to 1-to-1. I'm just waiting so I can take my one out. Actually took it out right there a little bit before. Yeah, I took it out a little bit before 1-to-1. That's crazy. I mostly did not. I like the trade, but I don't like the trade. The thing is the EMAs. This is not textbook. This is like a C+, B- type of trade. If I were to grade it on a scale from A to D. But yeah, pretty simple. So 1-to-1 hit, stop loss break even. I got some profits. Now just let the other one run. I should have taken the first one out at 1-to-1, but I think I was being a little bit more conservative on my risk here. Just because I didn't want it to come back before 1-to-1 and go back to drawdown. So I wanted to preserve my capital here, especially taking a lower grade setup, like a C+, B- setup. So what I'm looking for here is one more bullish candle to push it up near the highs to take it out. Now right here, my profit target for a day on a 50K Express is about $200. So right here, I'm already good. I'm already up about 220 for the day. You can see at the bottom, my Express accounts, and I have the practice account. The practice account, I put like 15 contracts on Russell. I mean, you can just see I'm up 2,500 on the practice account. It just shows you that the amount of contracts you put on will correlate to the amount of money that you'll make. But the thing is I'm very consistent. So all I have to do is up my risk, and then I can start making some good money from this. But kind of scaling right now, taking it a little bit slower. You can see that bullish candle coming in. We're going to break the previous high of this candle. We're looking pretty good right now. Then I started trailing my stop loss just to make sure I would get some profits on this. Usually I don't do that, and just depends on the runner here. But right here, I didn't want to leave any money, or I didn't want to let it stop me out at break even rather than taking any money from this trade. So right here, we're looking pretty solid. This is beautiful. Just tap the zone, break of the candle, stop loss below the lowest area, which is where the end of the red is, the lowest area in the demand zone. And you just let it run. Let it run, hit your 1-to-1, take some out, and let it keep going. So right here, I'm up about almost $300. And it started to stop a little bit right here, slow down a little bit here soon. So I should have closed here soon. Could have let it go to the highs for sure, but this is still a good trade regardless. Still great risk management. And right here, I'm pretty content. So very simple trade, very easy. Now, if we had all EMAs below the zone, this would have been a textbook, beautiful trade. But see, 286 on the day. It's actually 286 times 3, so it's gonna be 240. That was actually like $840. But you can see my P&L on my Express, pretty textbook. So yeah, man, that's just the trade breakdown. pretty simple. Just rinse and repeat, bro. Rinse and repeat. Break a structure, come back into a buying zone, break of the candle or a breakout trade, 1-to-1 target, and stop loss to break even. Once you hit 1-to-1, if you're going to hold the runner and let the runner run, manage the trade, and yeah, that's pretty much it.